Most traders are looking for a strategy that always makes money, and that's exactly why they consistently lose money. In this video, I'll show an approach that works not because of indicators or luck, but because of logic, risk management, and proper decision making. We will move straight to practice, analyzing the market, real trades, and situations where it's actually better not to enter at all. If you want to stop guessing and start trading consciously, watch carefully. I remind you that I have my own Telegram channel where I share strategies, some personal techniques, access to copying my signals, and a lot of useful information. Make sure to subscribe. I'm always happy to share information with both beginners and more experienced traders. If you think that strategy is the main thing in trading, you'll be surprised. That's not entirely true. A strategy is just a tool that you can learn, but the result is created by your overall approach. Before moving on to trades, it's important to understand one thing. The market is not about speed or guessing. It's about expectations and correct entry points. You must develop self-control, avoid impulsive and emotional decisions. Your trading should not turn into chaos. It should be stable and based on analytical thinking. I won't drag this out. I'll now show everything in practice. Open several trades, explain why I enter a specific currency pair, why I enter at a certain moment, why in other situation I simply observe and do nothing, and how I control risk in each case. Let's move to the chart of the first currency pair. First, I analyze different time frames. This is a golden rule. Usually I look at the 1 hour time frame to determine the trend. There was a clear upward trend. You can see a growth from here. I mark the previous low and always mark levels. This helps me track the pair further. From this point, the price moves upward. Now there is some consolidation and a slight pullback. Volatility is not strong, so I think the price will at most reach this lower level. And from this we may get a solid entry for long positions. I also want to say a few words about risk. I remind you that per trade you risk only 1–2% of your deposit. This is the maximum. Do this only after practicing on a demo account. A demo account works exactly the same way, so it's an excellent place to practice. For one trading session, you allocate no more than 10% of your deposit. If this limit is reached, trading is over. No revenge trading, no emotion, no pressure. This is not weakness. This is a professional approach that allows you to make money in the long run. I want to talk a bit about a key block of this video, time and expiration. I don't trade ultra short trades like 5–10 seconds. Sometimes I trade 15 seconds, but only when I see clear price pulsation aligned with the trend on lower time frames. In such cases, I may open several trades, but mostly I trade 1 minute time frame. I'll set my order to 1 minute. Why don't I enter very short trades? Because in one candle, the market owes you nothing. For the price to reach a level, react, pull back, or breakthrough, it needs time. If you analyze a 1 minute chart, the trade duration must be longer than one candle. This gives space for logic rather than guessing. Right now, several bullish candles are forming in a row. You can enter a buy trade, and I enter here. We see a small downward breakout according to the 2-candle rule, but most likely a reversal is coming because the previous candle is long and the next two support it. The price has reached the lower level, and this is exactly the moment when a market reversal may occur, approximately to these levels. I'm marking it now. A bullish candle is already forming. We don't rely on a single candle. We analyze multiply time frames, define the trend, and then enter at a confident moment, when previous candle behavior confirms our logic. We trade based on logic, no guessing, no chaotic button clicking, only clean logic, a clean chart analysis and understanding. With experience, you will perform technical analysis much faster. For now, don't worry, spend more time on it. And then you'll start trading in profit, just like I did now. You see, successful trade. So, what was the logic? We saw upward pulsation, price reached the previous low, two candles formed. According to the two-candle rule we entered, a large candle formed, a small pullback appeared, and now a series of bullish candles continue. I think we can open another buy trade when a small pullback occurs. Right now there's a good pullback, and we can enter. We enter. The level should hold, and the previous price behavior confirms this. So we waited for the pullback and entered. Simple. It's important not only to determine direction and trend, but also to choose the right entry moment. Then you will trade in profit. I always look the context first, where the price is, whether there is a level or zone, whether it makes sense for the price to rank there, whether the market is in a range. I repeat, if the market is ranging, I don't enter. Not taking a trade is also a decision. If your technical analysis leads you to conclusion that you should not enter, that's already a big step. I think we'll close in profit right now. A very good stop is forming. Price may reach the upper level I marked and then reverse. We can push it to the top, then it already broke, and we close in profit. Right now reversal is possible, and we could consider a sell. A very large bearish candle is forming. I won't enter a sell yet because the price is moving with the trend. I think we can even enter another buy. We follow the trend. The price can easily reach these levels. Large bullish candles are forming. You can see what's happening. I'll zoom out a bit. There is a small pulsation now, but our entry was good. If we close trade in loss, I remind you that using martingale system you can recover later, but you must set strict limits, no more than 2 losing trades and a multiplier of 1.52, no more. Don't obsess over this. It's better to exit early with a small loss than to completely drain your account with martingale if you trade without logic. A reversal is happening now. It should break our level. The second candle is forming. I think it will reach it now. There it goes. Very good. The price moves up exactly as expected. I think it will go to the boundaries. And we closed in profit. Live without edits. 3 successful orders. Right, great. I'll move on another currency pair. On the 1 hour time frame. We see a choppy market moving toward consolidation. If we take this area, volatility is quite high. These candle patterns indicate that the market may reverse either upward or downward. You see these small candles moving back and forth. I don't recommend entering here. This is exactly what I talked about earlier. We understand the logic, read the chart, and I make decision not to trade, and that's already a big step. Volatility is strong and the market can go in either direction. So I choose another currency pair. We always select a pair based on payout. We look at the 1 hour time frame. There was a drop, then consolidation, and now a downtrend over the last hour. I look at the impulse. The impulse is slightly upward. We can wait for a pullback and enter a buy. While I wait, I want to talk about adding two positions. Adding is not about saving a losing trade. If you add without a plan, you will lose. Open a buy. You must clearly define where the next zone is, what risk percentage you are using, and where you will stop. All of this must be planned in advance. If you have 5 losing trades in a row, your trade logic is broken. Something is wrong and needs to be reviewed. No, just one more try. If it doesn't work, something is wrong. You must analyze it, understand what went wrong, and fix it. Only then will profitable trades return. Now we see a good candle forming. We waited for the pullback to the level, opened a trade, and then reversal started. Buyers became active and the market reversed. As you can see, everything is simple. The logic of today's video is that you can trade by understanding candle behavior, levels, marking everything, and managing risk thoughtfully. Another profitable trade. Great. Everything is clear and accessible. No complex setting, no complicated indicators. Everything is based on understanding the chart. This is very important. Once again, I remind you, if you want more strategies, more technique that I use personally, more information about trading, economic news, how they affect the market, and what influences the market in general, be sure to subscribe to my Telegram channel. The link is pinned. Leave comments. I'm always happy to answer questions, help beginners, and share experience with more advanced traders. I want you to earn consistently and have stable profits. Now I will withdraw my profit. As you can see, I have about $4,000. Today we earned about 700. I will withdraw 700. I choose my wallet. Enter the amount. Enter the continue. All funds are sent. It says within a few business days, but in reality the money arrives in 20-30 minutes. What I want to say in conclusion, the key is not just the strategy. The core of trading is psychology. Why do many people succeed on demo accounts but fail on real accounts? Because fear appears, greed appears, and the desire to speed up results appears. The market senses this instantly. Until you learn to think in percentage instead of money, there will be no result. If you limit risk, wait for your setup, don't rush, and don't trade emotionally, the result will come. Maybe not in a day, maybe not even in a week, but it will be stable if your approach is right. If my calm, logical approach resonates with you, I share it regularly. I'll be glad to see you in my next videos. Have a good trading session. Bye!